So I don't think we're in like a full-on bear market. I think we're obviously in a weak portion of the cycle, and Bitcoin has been roughly flat for 12 months now. It's kind of had a lack of catalyst. It's kind of one of those things where, it gets ahead of itself for a period of time and then corrects. And some of those corrections go on for 6+ months. This one basically went on for 12 months, even though there were new highs along the way. I've kind of been in the camp of always kind of being a bearish bull, which is I try to avoid price targets, more focused on direction, because you can't necessarily predict like illiquid moves and kind of euphoric periods or kind of lack thereof. But when I do get kind of cornered into giving a price target, I think one of my main ones was 150K for this year. So it looks like we're probably not going to touch that. But like John said, we still have 2 months to go. So we'll see what happens.
Lynn Alden dives into Bitcoin, the Fed cutting rates, QT ending in December, and rising global liquidity. Let's watch her insights unfold.
Yeah, I think an example to be familiar with is the Mag 7 stocks. Basically, these really kind of mega cap US tech stocks over the past 15 years. For a lot of them, if you ask, what cycle were they on? I mean, not a
Yep.
particularly, specific cycle. And the booms and busts were muted, because they started from a larger base than Bitcoin was, 15 years ago. And they've gotten, some of them to a larger market cap than Bitcoin is now. And um, they've traded in traditional markets. And if you ask people, before the idea of $1 trillion company was, an extreme thing. And now, companies have been over 4 trillion. I think Nvidia might have touched 5. I'm not sure. But several have touched 4 at this point, and more have touched kind of 2 and 3. And so a lot of these companies over the course of 5, 10, 15 years reached heights that most people did not expect them to. And they just kind of kept like every time they would say, okay, this price to earnings multiple is a little bit high, or this is kind of concentrated. For a period of time, it might cool off for 6 months or 12 months, and then it just has another rip higher because it's fundamentally being adopted, whatever kind of product or service they had. And I think Bitcoin's kind of in that phase now, where there are some bears that are saying 2 trillion market cap. That's kind of enough. How could it possibly go higher than that? It's magic internet money. How could it go higher? Kind of like how could a phone company, like Apple, how could that get as high as it is, or how could an operating system company like Microsoft get as big as it does? Or um, and I think basically over the next 5-10 years, it's going to kind of behave like that, where it surprises bears to the upside, where it just gets bigger and goes on for longer than they think. But it doesn't mean that basically bulls are going to be entitled to 5x multiple gains in like a typical 12-month period. It's not on that kind of easy 4-year clock as it was for a period of time. And I think even the 4-year cycle, and I've done research on this, the last couple cycles, it was kind of a blend of the halving cycle and the liquidity cycle. And so as basically we have the kind of the importance of one declining to the point where it's almost negligible now. And then those other factors kind of gradually increasing in prominence as they affect Bitcoin's price.
Bitcoin's latest surge has everyone talking, but not everyone celebrating. As the crypto giant storms past $106,000, traders are calling it the most hated bull run ever. The excitement comes as the U.S. government edges closer to ending its historic shutdown, and President Trump pledges a $2,000 tariff dividend for most Americans. That promise alone reignited memories of the COVID-era stimulus checks, the kind that once fueled a powerful Bitcoin rally. Market optimism is building, but it's a cautious kind. Derivatives traders remain hesitant, showing little conviction that Bitcoin has found a long-term bottom. Data from Glassnode highlights that fear still dominates sentiment, with many betting on another dip before any sustained move higher. Yet whales, the large holders who often drive market momentum, are showing mixed signals. Some are selling aggressively, while others are quietly accumulating again, suggesting a brewing tug-of-war behind the scenes. Amid all this, global liquidity keeps rising, and the Fed's ongoing rate cuts add fuel to the fire. Could this be the start of another explosive crypto cycle, or just a calm before the storm?
And so that's like, we hit 125 or change. I had a similar thing last cycle where at first my target was a trillion market cap, which was somewhere in the ballpark of 50K. We touched that. And then I gave a target of, I think we'll hit 100K. That was still lower at the time than many of the bulls. We ended up not reaching that. We ended up only getting 69. So far we're kind of in a similar thing where we kind of hit initial bullish targets, new highs and all that, but then kind of stagnate a little bit. I generally wouldn't look too much into this whole kind of 4-year cycle aspect. As the halvings continue, the new supply is a much smaller component of the total supply and demand out there. It's more about what price will unlock coins from existing holders, either because they want to sell into bullishness or because they're selling into weakness. They're afraid of their position. Either one. That's the type of thing that can really kind of affect price more so than what is the kind of the rate of new coins hitting the market at this point. In addition, prior cycles, because it was a much smaller illiquid market, and with kind of in general on average less sophisticated kind of participants, not necessarily in terms of like intelligence or anything like that, but in terms of hedging, in terms of kind of how they tend to rebalance and stuff like that. We had kind of more non-financial people involved, basically people that are sophisticated in other areas, not in terms of like sort of portfolio management. It didn't really follow normal rules of assets, whereas now that it's kind of held by those who tend to hold other assets, they tend to treat it like they do other assets, which often results in rebalancing and things like that.
Yeah.
And so in prior cycles, like the market cap would get way ahead of the on-chain cost basis. And so it kind of like some of that price spike would be ephemeral because it's like it didn't really reach that price on a sustained basis. It was just kind of like a small number of coins would then, when you extrapolate over the whole market cap, kind of say this is the current price, but it wasn't like a price that was kind of a very liquid price. And so I think we're past those kind of periods of just massive disconnects. We still have the on-chain average cost basis inching up at this phase. So I generally think that while it's been weaker than expected, I generally view that the cycle is going to go on longer than expected because I think we're driven by other things ranging from regulatory actions, ranging from liquidity, ranging from all sorts of other things, fiscal, economic stuff, and very much less so to a nearly negligible degree, the supply halving cycle.
Where will Bitcoin be in 4 years? That's the question many investors are asking as Bitcoin continues its unpredictable but fascinating 4-year cycle. Historically, each halving event, when Bitcoin's new supply is cut in half, has triggered explosive price rallies followed by steep corrections. From $12 to $1,150 after 2012, $650 to $20,000 after 2016, and $7,000 to $69,000 after 2020, Bitcoin has shown a consistent rhythm of boom and bust that defines its unique market DNA. The latest halving in April 2024 sent Bitcoin soaring to $126,000 before cooling near $100,000 today. Some fear that history might repeat itself with another massive drop, but others believe this time could be different. With institutional money flowing in, a friendlier U.S. administration under Trump, and growing mainstream adoption, Bitcoin might be entering a new era of stability. If the pattern holds, the next halving in March 2018 could set the stage for a powerful new bull run, possibly sending Bitcoin toward that long-discussed $1 million mark by 2029. For long-term believers, patience might just pay off again. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news all for free. That's all for today's video. Until next time.